Happy Friday, everybody. Welcome to the Flow Show. It's Friday the 21st, and we've got a fair bit going on this morning. We might even have peace in Ukraine, which would be something, but we'll talk about that shortly. Let's see if they can pull this one out the bag this time. Morning, Kay. We got there.
Morning, Ryan. Yeah, I was thinking like, okay, Black Friday, no Friday in the markets, but yeah, we have a bit of fun in those markets.
Yeah, very much so. So lots to talk about. Going to start off over in Japan and a bit of data. We had some CPI data, the national number coming in pretty much hotter than expected. Well, hotter than prior at least. The headline number coming in 3% versus 2.9 previously. Core number coming in at 3% versus 3% expected, up from the 2.9 previously. The fresh food, energy, and everything else came in at 3.1%, up from 3%. So still very decent inflation numbers for Japan, which has got Mr. Ueda waffling on about, which I'll get to in a moment. We also got the PMI, latest PMI flash number for November, Japan as well, coming in as expected for manufacturing, 48.8, a small rise. Services stayed unchanged. And as you can see, just up there, we have the Aussie numbers out too. Manufacturing moving back into expansion and services improving a little bit as well. Missed all the old trade numbers in Japan. Trade balance improving a bit there. And better on the activity front. Imports up 0.7%, exports up 3.6%. So a lot of green coming into Japan once more. As mentioned, we had BOJ's Governor Ueda speaking and sounding a little bit more positive. He says companies are now more willing to raise wages and prices. The probability of BOJ projections materialising is increasing. He says they kept policy steady to confirm firms' wage-setting momentum. He says we'll scrutinise early signs from next year's Shunto wage talks, and also says we'll use nationwide branch surveys ahead of the next meeting. So it's the regional surveys that we get from the various BOJ offices around Japan. Says we'll debate the timing and likelihood of a rate hike using full data. Okay, he's taken a hefty step forwards in terms of talking about the next meeting.
Yeah. I think we're getting ready for a hike here. It would only be the first one off in a year. So after 2 years of his tenure already, he finally will get up to 75 BPs. I guess it's a 25 BP. They can't do more looking at how the government plans are going. But yeah, it's we're getting there. We're getting there.
Yeah, very much so. We had Katayama out, Finance Minister Katayama out with the usual waffle, though she did throw in a line saying that FX intervention is included as a possible response. So we're actually mentioning intervention, but that might not be needed now, given what's happened in the yen since Takaichi finally announced the size of the package to 21.3 trillion. But the biggest surprise was her comment that bond issuance will be lower than last year's fiscal year's 41.2 trillion. So she's doing this big package, but she wants a lot of that to be paid for by tax receipts, and so will not be issuing as much to fund it, which is good news on the fiscal front. However, there was a caveat that she will issue bonds if extra tax revenues are not enough. She says she must make Japan stronger through active fiscal policy. Now, this is something I've been mentioning all pretty much since she came in. She has, as much as the market's been very fiscally dovish about her, she has talked from a very restrained position, responsible position. And it seems now, maybe the market's taken notice, maybe a bit of buy rumor, sell fact in there, but the news is out, and potentially good news if it actually works.
Well, yeah, we don't know. We don't know how much is less less bonds, right?
Yeah.
What I think is well, yesterday we had like several factors and overnight as well. So this comes into the mix. The potential hike in interest rates by the Bank of Japan comes into the mix. They have there is this Japanese Bank for International Cooperation. Then they have the Development Bank of Japan, which is also one of the official arms who can come to the rescue with funds. Also, let's not forget that the Bank of Japan is also reducing gradually its holding of rates and ETFs, which is going to bring money into the coffers because they are in at I don't know levels. I'm probably half the price of where the stock market is now, or something. And so those are going to bring in also a bit of money. About the taxes, I'm not 100% sure where they are going to increase exactly those taxes. Maybe she said it and I missed it. But yeah, it's and then combine it with yesterday's sell-off in risk, etc. It's a bit logic that finally we see a little bit of correction here, starting in the end, right? Because it has been very one-sided, and Katayama has continued to warn about potential intervention. So yeah, I mean this is a positive for the Japanese yen right now. Now, my next question is, how long will it last? The thing is, though, what I would say against all the doomsayers, and I'm still all in all bearish yen, but the doomsayers who say like they are breaking the system with those 30-year yields at that rate, and it's going to be impossible to fund budget, etc. Let's not forget that they've already reduced maturities as well. They are doing a lot less, unless Takaichi changes tack again, but they are doing a lot less of 20, 30-year issuances because they have a lot less buyers as well for now, and they know that the Japanese whales, as we call them, like GPIF, the insurers, etc., the trust funds, they have also shortened the maturities and looking for yield elsewhere. But they could come back any time because the next hike, maybe we get a little bit extra on the yields, and then perhaps the whales are not going to find it that interesting anymore to invest elsewhere, and they are probably slowly going to get back into Japan, which of course may have an impact on other markets. But yeah, I mean, what I'm trying to say here is that it may not all be as dramatic, but let's see if she succeeds to completely calm the markets, because it's not a done thing yet. If she manages to spur growth, and growth matching at least inflation with wage hikes, then she will have completely succeeded her plan. But that's far too early to tell.
Yeah, yeah, and I mean, she, said it at the start. She wants to, or she said it at the start, or I think the prior PM Ishiba said it. He wants to create a virtuous cycle in the economy. So if this stuff works, if they get wages up, if they get the economy moving, then she will get those tax receipts and won't have to borrow and pay, and those tax receipts will pay for a lot of this fiscal plan. But we always talk about it. Japan is not any other economy. Okay, this is all going to happen in 3 months type thing. They've spent decades trying to turn this ship around, and now the ship might be turning. It might be another 10 years before it fully turns. Who knows? If you look at normal economies, UK, US, whatever, it's a sideways zigzag over the last 30 years. You look at Japan, it's a trough, it's a long bowl that might suddenly, or might now be starting to curve up into the positive. So yeah, this is not going to happen quickly. It could be a very long time before they sort of get to levels that everyone else is at, and that's what you need to bear in mind. This is not quick moves. But yeah, we were discussing the yen earlier in the room, and no one's going to say this is a top for any yen pairs, but the wind has been changing for a long while now, and that might continue, which might make massive yen weakness a little bit difficult unless it all falls apart. But yeah, going to be in this for the long haul. Maybe we'll still be around, Kay, when Japan finally enters bull territory.
Maybe we will, mate. But I would say something, because obviously as soon as dollar yen goes 100 points lower, or euro yen drops 100 points, it's like, okay, this is the end of the carry trades. Now it's panic stations, breaking the system, obviously with US equities, and then crypto declining. The doomsayers are all over the place right now. But and the comparisons with July, August 2024 are all across the social media. There are still two differences in what's happening today, and that's why I'm still hesitant to really start buying yen. But it could be for a couple of sessions. We could see a bit of yen strength, especially if equity markets continue to come down. But we are not exactly in the same scenario yet. There's still two differences in 2024. Well, first of all, there were already interventions, but the Bank of Japan hiked before the interventions, and US CPI started to come down. Today, it's at a lower level, but it remains sticky. So there are differences between what the people say, like, oh, okay, this is Armageddon again. I don't think we are there just yet, unless they obviously intervene this afternoon. Then all bets are off. But yeah, I mean, there's differences between what happened July, August 2024 and what we are seeing now.
Yeah, 100%. No one should be thinking this is a massive top in yen pairs. It could be, but we're one day in. No one should be getting carried away with anything at the moment. But we'll look at the techs in a little bit. Let's move on to some of the other stuff. Coming over to the UK, we had the CPI industrial trends orders out yesterday, coming in at -37 from a prior -38, so a pip improvement there. Selling prices dropped to 7 versus 16 prior, so some disinflationary pressure being seen there. Today we got UK retail sales, and they finally nosedived. Retail sales falling 1.1% on the month, depending on where you looked. We were looking at a 0.1% gain or a 0.1% loss. So that came in negative anyway. So the wheels have come off. They couldn't complete the 5 months of positive numbers not seen since COVID. Core sales also down a chunk, down 1% month on month, and coming in at 1.2 year on year. Borrowing numbers as well, coming in a little bit better, missing expectations. Cash requirements, credits up a bit as well. Not that any of that means too much ahead of the budget next week. But Reeves is due to get I think it's sort of one of the final updated OBR reports before the final one next week. This is not going to be publicised, but it will leak at some point. So this might be sort of a last hurrah for the market to know how much money she's going to have to find at that budget, and that's what she's going to do with it. So this might come out today, over the weekend, or something like that. So just something to be aware of. Further PMIs out from Europe. France manufacturing went backwards, but a very decent bounce for their services number, 50.8, moving into expansion from 48 the month before. So that was a bit of a surprise there. Well, whether they can hold on to it's another matter. Germany went backwards, manufacturing falling to 48.4, was expected to rise a couple of pips. Services also went backwards to 52.7, more than expected. The pan-Eurozone number as well, pretty much reflecting that, seeing manufacturing back into contraction and a little pullback, a little rise in the services number there, likely helped by France. Over in the UK, similar story, services down to 50.5, just hovering now above that expansion contraction level, but manufacturing moved into expansion. The details not looking good underneath, though. Prices were down significantly, output prices were down significantly, to the lowest in 59 months, though input prices picked up quite strongly, so a bit of a margin squeeze going on. Obviously, around any sort of UK data at the moment, it's all blamed on, you know, potentially the upcoming budget, though one could say some of this in the business terms is down to the prior budget, and which is going to be made worse at this budget. So anyway, there are potentially mitigating factors, and Reeves has got a lot of work on her hands to turn sentiment around from a budget next week. ECB's Lagarde says we will continue to adjust our policy as needed to ensure that inflation remains at target. Bundesbank was out with their latest note saying that the German economy could grow slightly in Q4. Bit of a hope trade going in there. Yesterday we got the NFP, woohoo, finally, and pretty good numbers in the end. Headline coming in at 119,000. On the splits, private payrolls were healthy, 97,000. No wobbles in that government number. That came in up 22,000. That was a potential risk area to look at there. The only knock to that headline number was that the prior 22k plus 22k got revised to minus 4k, but not that the market's too fussed about that. The unemployment rate did go up to 4.4% though, but that probably due to that little jump in the participation rate as well. Jobless claims came out. We're up to date with that. I don't know what went on with that number that we got the other day, but that got pulled off the website, and now we're all apparently up to date with everything. So anyway, that wasn't too bad. 220,000, though continuing claims still looking a little bit hotter in that high 1.9 million. Kay, bit of a strange reaction to that good number yesterday. And, the dollar took a little bit of a knocking.
That's what I said when they came out on Face. I said that there was silence.
Yeah.
I mean, for the better part of 5 minutes, the market, okay, the dollar dipped a bit. I guess the market is looking at that unemployment rate. But a very much delayed reaction. And what was interesting, though, is that some commentators were saying, like, yeah, but these are September numbers, and the real big shift in company layoffs, whatever, should be shown in the October number, which, by the way, I'm not even sure we are going to get at any time, because they said that they didn't have enough information, to compile the October numbers up to now, at least. So I think there was this consideration in there relatively rapidly. But yeah, it didn't. We had a very, very mixed reaction, and until all of a sudden equity markets started to turn around, and I think we could list 5, 6, 7, 8 factors why something would happen, but it does seem like some bigger accounts or so must have been waiting to get over the hump of those data, and then do whatever they were planning to do before, and sell the hell out of risk. So I guess it's already thinking about the next negative number and shrugging off that September number, because as such, this report would have been relatively positive for risk. The Joe, what is that? You says 6, 7. I don't know what you mean, Joe. But it's the delayed reaction which all of a sudden, and I think took quite a few people by surprise, because for at least a number of minutes, FX barely moved, right? And then we had, of course, the reaction that we saw in risk, which is a relatively normal one, the way risk trades of late in the different currencies.
Yeah, yeah. Michael just popped up in our chat room to say that NFP wasn't that healthy because all the jobs came from healthcare, leisure, and hospitality, and that obviously the
Must,
revision was negative. I'd only counter that by saying, yeah, but jobs gains is jobs gains. You know,
mm,
it could have been jobs losses, and it wasn't. Doesn't matter
yeah,
where
it
the
must
jobs
be.
go, the gains are gain.
Yeah, it must be healthy though, Michael. If the jobs came from healthcare, to use one of
Oh,
your puns.
no, no, don't you start. Not on a Friday. You're gonna get a red card as well, mate. I'll tell you that. But yeah, well, an up 119 is more healthy than a down 119. That's all I know. But
Hmm.
anyway, we can tear the numbers to shreds. The market did what the market did in the end with it. We also had some Philly Fed data out, which was a little bit came in at down 1.7 points. Was expected to rise and turn around the negative October, but it didn't, although it did improve to be less crappy. We also got some Canadian PPI data, which was a bit hotter than expected. Not that anyone gave two monkeys about that, with everything going on with the NFP anyway. Existing home sales coming in a healthy 410 million for October, so nothing to write home about there either. The economy overall, the data's dropping slowly but surely, and the economy overall is still ticking along as it has been. So there is no worries. I did ask a question in the room and on Twitter that if the Fed had seen that jobs number before the October FOMC, like they should have done, would they have gone and cut rates? Which on Twitter, at least, the majority said no, they wouldn't have. Kay, what did you think about that? Would they have cut rates if they got that number?
I think they would because of the terminology that they used, being a what did they say? Insurance cut. Yeah, I think they might have after all, but they would probably completely close the door on the next ones. Yeah, yeah, I would lean towards, but it's not a big conviction either. I must say. I
Yeah.
mean, ish, it's a question. It's a legitimate question in a way because it would have impacted markets, but then it's a done thing on the other side, right? So
Yeah, yeah,
yeah, is the question to be asked now? I the thing is, it's is that 4.4% because it's like 4.44%, right? It's like one hundredth of to have printed a 4.5%. Um,
don't you start with a third decimal
I
place.
know, mate, but I know, but that's what people are doing right now, and who are we to completely brush it under the rug? But I agree. I mean, it's 4.4. I mean, may have been enough. I really don't know, to be honest. It's a 51-49 kind of conviction, meaning
Yeah,
nothing.
yeah, exactly. Anyway, yeah, it is old news, so we are where we are at the moment. Right, let's move on. What else we got cooking as well? We had a couple of Fed heads out. Fed's Hamak still banging the pretty undovish drum, saying rate cuts risk prolonging high inflation. Could also encourage financial market risk taking. Fed's Goolsbeast says for inflation, we've set a 2% target and 3% is too high. Says he feels uneasy front loading rate cuts and counting on transitory inflation. Fed's Bar is also concerned that inflation is still at 3%. Fed's Paulson says he's approaching the December rate decision cautiously. Says rate cuts so far have been appropriate, but each one raises the bar for the next. Morgan Stanley, the latest to throw their forecasts up in the air. They no longer expect the Fed to cut in December after that jobs data number. Let's see what happens if the rest of the data falls off a cliff between now and then. We did get a 19 billion 10-year tip sale. That came out pretty well. Decent bid to cover. The indirects were up as well, so everything tickety-boo there. White House Economic Advisor Hassett says September jobs data were a hit out of the park. Nothing like him getting excited. Said the shutdown had a much bigger negative effects than anyone had expected. Says it will take into December to start seeing the recovery from the shutdown. More data has been shifted around. PCE and GDP that was originally coming on the 26th of November has been rescheduled. I haven't actually seen when it's been rescheduled to. Not that it matters. It will be on the calendar when it's on the calendar. Right, so on to the other news that's going on. So we had earlier in this week people saying that Trump is pushing around another Ukraine peace plan, one that's going to see asking Ukraine to cede lots of territory that Russia's already taken, give that up, not get that back, loads of concessions, whatnot, which Zelensky wasn't open to whatsoever. But this peace plan has been going around. Zelensky says he is now, or yesterday said he received the plan and expects to discuss it with Trump and the other diplomats. He did have a conversation with one of the US bods who went over, but he said he agreed to work on the US plan to end the war. The White House came out saying we believe the Ukraine plan should be acceptable to both sides, and that we're having good conversations with both sides in respect to ending the war. Reports are out that this draft apparently would limit Ukraine forces to 600,000 and that an election would be held within 100 days. It also provides security guarantees and uses some frozen Russian assets for Ukraine. This has now progressed this morning because all EU leaders, including Starmer, have dropped their pens to jump on a call, which is happening in the next 3 minutes, where they're going to be discussing the peace plan. So we could, let's look on a positive side, we could get a resolution finally, or something that's agreeable finally, which will be great news. But we've got to look at the other side, that we've been here before. If this current peace plan is as Trump touted, which Zelensky has knocked back and Europe has knocked back time and time again, it does open the door for more disappointment. But maybe there's something cooking, given how swiftly these meetings are coming together. Kay, what do you think happens to risk if we finally get an end? Obviously, we'll probably see oil dipping, which it already is. But what happens to Europe? Do we see stock markets rallying? Maybe.
The algo reaction may be, but if that's a peace plan based on what Trump has been coming up with again, I don't see it being a lasting positive for Europe nor Ukraine, because that's giving the victory to Putin and knowing the guy he's not going to stop at Ukraine. Then he's going to turn his attention to the rest, the eastern borders of Europe and NATO are never going to be in peace if they give in to such kind of plan. That's just my view. Transposing that to markets, it may be it may be a short-lived positive. I don't understand, Hannah. You're saying the plan is not in Russia's favor. It's based on a 28-point plan that Russia handed over to Trump. I mean, I don't know how one can say that Trump's plan is not in Russia's favor. It clearly is.
Yeah, no, absolutely.
That's my opinion, anyway.
Yeah, and that's why I'm concerned that it's not going to fly. As far as the rest goes, that's the risk. But as I say, let's have a bit of hope. Whatever the plan is, I think the market's going to be buoyed that if fighting stops this weekend or something, and troops go home, sort of thing, I think we're going to get a short-term reaction. But as you say, how long that lasts is anyone's guess. But we've been under this dark cloud for coming up to, was it 3 years or 4 years now? 3 years. And
we are in it over 3 years.
Over 3 years, and getting that dark cloud removed, at least in the short term, might be a bit positive. Obviously, it's not going to stop all this defence spending going on, and no doubt further arms to Ukraine or whatever. But anyway, let's celebrate the positivity if it happens, rather than the future negativity, because it'll be good for all people all round. Right, and that's it. Unless Kay's got anything else.
Thanks, but no thanks.
Good. That's the end of the news for this week. Over to the weather. Right, let's look at the weather that's happening in the charts. Right, so Dolly Yen going to start off with here. So, yep, this has given all this news has given the yen a bit of a boost. Inflation data, Takaichi, Ueda, so on and so forth. Everything going on. Stock market's coming down. So we are seeing the yen pairs coming off a little bit. Obviously, in the wider context, this is nothing but a blip in that particular rally, as you can see there. And that's just since the end of September, middle of September. So this is absolutely nothing in the wider context. But things have to start somewhere. So we could maybe just be seeing a little shift. Maybe it's a bit harder to see yen pairs rallying from this point forward, and we go into a bit of rally sell mode. What's been interesting in this break back under 157, it was holding, and that for me is a little bit of a signal that we might have flipped the switch, at least in the short term, from dip buying to rally selling. Certainly there's no real reason now to be smashing into dips on this one until the lay of the land becomes a little bit clearer. I've had a little nibble myself into that 157 test just to see if it held. So we'll see where it goes from here. Bit of traffic in this 156.50s. Probably get a bit more just down here into this 156.25.30s before we get into the 156 figure. Anything down here at the 155 will be yet another big important test for this part of the rally and the rally in general. But that rally I just showed you, the 38.2 isn't down until the low 153s. So a long way to go before we're turning this thing around. But things might start somewhere. So just watch how rallies react from this point. If we get back above 157 quickly, then we're obviously probably not done yet. And then we might go and have another little look at the highs near 158 from this point. Looking at dollar CAD, because this is having another little mooch up to 141. And perhaps, Kay, this one might be, hasn't been for a long while, might be on the oil bus for a change.
Yeah, finally again. Oil and risk. We've seen all the commodity currencies getting a slap around the ears yesterday, and Canada was part of it. As we see with let's say the currency on the other side of the pond, Norwegian kroner also got hit. And then the antipodians got hit, but yeah, they were all like on the same train yesterday. Risk and lower commodities, lower energy. So yeah, I mean, I've taken parts of my Euro Canada just because those data in Europe weren't convincing me again. Just keeping a tiny one, but yeah, this dollar CAD. I've had a level there, not too far from here. Oh yeah, it's 140.80. So we're just above right now. If that's a hold, it's that's probably your 76 there. If that's a hold, it's looking positive, right?
Yeah.
And we could have a look up into the mid 141s perhaps before the week is over. That's potentially the next move to close the week, unless we get a big revival in equity markets. But after the move yesterday, being Friday, I'm not sure we are going to see a leg higher in equity markets, unless we have a surprise deal in Ukraine, Russia. But I don't think that will be known before the weekend starts, because the any counter offer will have to be validated by Russia, and that will never be done in a couple of hours, right?
Yeah, exactly. So maybe we'll get something out of this call that's going on at the moment. So let's see how long that lasts. But yeah, I mean, dollar CAD, it's still keeping this its momentum, all the way down from the 135s where we bottomed out. So it's still looking good as far as the trend goes. But yeah, we got a small level here, 141.0810, whatever you want to call it. Just this little bit of price action. It's bumping its head again back above there. We may well go on to test these prior highs and have a look up. I think this one could be a mover if we do get good news and we see all having a little spike lower. This might be what's needed to give this a shove up. But it was interesting also the Tuesday we held this level down here, which has been one I've been keeping.
Very interesting.
Very interesting. I mean, we've had these little pokes underneath, but it's more the case that it doesn't stay below there for very long and it gets back above. So that is still remains the key level here for how this rally performs before we start messing around with the fibs. Anyway,
I may actually give it a try, mate, on that dollar Canada now that I have a lot less euro Canada in the books. Does look like it's wanting to go, especially if the dollar stays bid against the rest, like we are seeing in the Aussie, Kiwi, Norway is trying to push through as well.
Yeah. This was one of the ones I had a little nibble on over the data, and I thought, oh, I've had a rick here because it wasn't moving, but then it did pick up in the end. So yeah, this we'll see. It's a lot of risk at play in this one, I think. So yeah, we'll see where this one goes from there. Right, excuse me, I'm just adjusting my euro dollar that I took on yesterday. And that's creeping back down. Anyway, right, moving on. What else? I look at Aussie Kiwi. Couldn't quite get up to where I was looking for. I've been a bit picky with this as where I want to enter, but it's coming back down to the figure. Going to see what it does from this point. If this low is pretty solid, we should probably get a bounce off of this level, be it the figure or this level here. If it does that, then it might change the picture, the short-term picture slightly, make it just a little bit more bullish if we hold down here, because it means we're likely to push up, and buyers here are stepping up the protection to around this sort of area. But so this one might just be sitting on the fence, consolidating for a little bit before it decides which way it wants to go. But I'm still interested to see what happens if we get a test up at that 115, 116 area. Right, okay, moving it over, mate.
Okay. Yeah, what am I going to show you guys today? Traditional ones, likely, but it is one that I closed yesterday because risk was a consideration that I had, and we came relatively close to. Maybe I should widen it just a little bit to show this trend line that I've been watching. We came relatively close there yesterday. So, and then when I saw risk turn, I actually decided to get out of it. I was in from quite here-ish, 91.90. And so I closed it yesterday, that Euro Swiss. I'm just looking at risk, what risk is doing. It's not that it's actually coming off a lot. It's holding very, very, very well. So if I get a move down to maybe half in the middle of the 92s, I may step back into it. We have to maybe look while I'm on there. On to the S&P. First attempt didn't work. Second attempt worked a little bit to get below the trend line yesterday, though. From this what is it, the 38.2 there, we really collapsed, and it all went together. I mean, all those metals, the equity markets, the metals, even crypto, it all went together in one go yesterday. So that's really clearly indicating that some, I would say, bigger accounts have been offloading whatever they had on, call it, positive risk, but in the broad sense of the word. I think just holdings, scaling down portfolios, right? That seems what has hit it yesterday. We are, though, in this S&P, we are getting at interesting levels. So we have those prior lows here, and then we have also fib levels around here as well. The old high that we saw as well, and that's all happening around 64.90, 65, 65.10. Okay, this is going to be an important one on the S&P 6500. If it holds and we start to creep higher again, it's going to be just one of those. This has been a violent one, of course, that 4800. But in the bigger scale of things, we have seen those, right? Those setbacks, those setbacks, those setbacks. And it was all looking a bit iffy and fragile. Yes, this is a bigger one. I fully agree with it. But it's still possible that we hold that 6500 level. This is really, I think, one where we should pay attention to in the S&P. The rest of the currencies actually didn't do much, right? Okay, euro dollar up and down and in the middle. That was a typical move yesterday as well, where um, the dollar rallied against Canadian, Kiwi, Aussie, whatever, and then the euro dollar got stuck. Why? Because, as we have already explained a lot of times, euro is also euro crosses. Certain euro crosses are also bought on the back of risk off, and the yield differentials in the euro between the eurozone and the dollar block didn't change much. There was enough uncertainty on the headline number versus the unemployment rate, just keeping it in this tightish range. Okay, so what we will have to monitor for the rest of the day is clearly 115 figure 10 and 115. Okay, we didn't get up there, but 115.60 is the level. So you got like about a 60 pip range here. Could well be that due to those low vols that we have in the euro dollar still, that we just continue to hang around in this zone, and unless something happens this afternoon, because there's always different time zone, unless something happens on the dollar rates this afternoon, because they are looking a tad fragile to me. I would not exclude that those maybe slip a little further, which could bring a bit of support, but it's really if this and when that happened. There's a lot of ifs there. Cable look, I would say still even euro sterling doesn't move. The downside picture looks a little clearer to me still, for as long as we don't rally back above 131, 60, 80. We know the levels up here. But in the meantime, if you look at that move, and if you look at what the euro dollar did, we're pretty much doing the same move. So as I was saying yesterday, looking left, there is a lot happening between 129, even low 129s, but I would say especially between 129.45 here and 130.45. We are above the zone, okay? So, and I still think that if we get into the zone, we may again see this kind of price action. I wouldn't go completely um, sell the crap out of cable if it goes into that zone. I think there's going to be a lot of work to be done if we get into that zone. Um, but I mean, it's not something. Do you have an idea about the cable, Ryan? Because I'm really looking at it. Yes, overall it looks still downsloping, but it doesn't seem like this thing is ready to completely fall out of bed either, is it?
No, I think it might just be waiting. I think we're in a bit of waiting. Obviously, the dollar's going to push it and pull it around, but a bit like euro sterling, all eyes
Mm,
on the budget and what's coming
yeah.
from that. I think if we get a leak of this OBR report and it's bad, we'll probably be down at 130, maybe even
Yeah.
going through it, and then that might be a different kettle of fish.
When is it? When is that stuff to come out?
It's not official. It's just the OBR have been updating Reeves with the numbers over the last couple of weeks. It's part
Mm,
and parcel of the budget. They just they say here's the latest numbers, off you go.
mm,
But I think this is the last one before the budget, so it's going to potentially help her finalise what she's going to do. But it's not publicised. But as we said, like
mm.
everything else, it leaks. So we will get it at some point.
Okay. All right. Cheers, mate. Okay. Gold. It's still hopping up and down in the similar kind of range. Those lines seem to seem to tell the market not to do much. But the one thing that we have to note from the second part of the week is that the highs, even though yesterday we had a quick look after the numbers, quick look at 41.10 again, close to 41.10. But the highs are getting a bit lower, as we can see, and the lows are getting a bit lower as well. So similar to what's happening in silver right now, I wouldn't be surprised, let's put it that way, I wouldn't be surprised if we slip a little further here on the day, just because of this these kind of moves ongoing, okay? But we have seen this here as well, and then it rallied, blah blah blah. But I would not be surprised to have see a test under 44,020 and at least go and have a look at 4,000, maybe 39.75, 85 around here. That looks within the reasonable expectations. Now, I'm not a gold bear, and by any means, I think in the longer run we are still going to see higher levels, but it's just the Friday moves, okay? Don't forget that we may have those lines on Ukraine by the EU leaders, which may have an impact on this one as well. Any adverse news would probably see this jump again. But okay, so this is just how it looks. Will we continue this pattern into the end of the week? We will see pretty soon as US walks in. Silver much weaker than gold right now. And here also we did on Wednesday print this high, but which was a lot lower than the prior one, and the subsequent move has taken us below the prior low here, below the trend line as well. It's looking similar. It's looking similar. I think this 49 and a quarter, give and take 10 cents either side, because it's silver and volatile, is likely going to be important to see where we are going to open next week as well. But I would not, it's similar as gold. Looking at this, I would not be surprised if we see a bit of a further move to the downside, down to maybe around 47 and a half again. So this is kind of how I look at it. Obviously, if it goes above 50, 50 and a quarter, and it holds, this will just only have been another correction in what is a monstrous upward trend, or still in the medium term, right? Or in the longer term, I should say. So okay, but this is like just the intraday moves where I think it's important to keep a look. The other one, which as I said, got hammered, and I was pretty fortunate to not be stubborn on my Euro Noki, otherwise I would have been stopped out there. And I bought it back virtually. Well, I mean, yeah, okay, no, 2-3 cents above where, above where I sold it. But I was happy not to be stubborn on that one. Dollar Noki is trying to go for it, guys. 10.26, 10.27, we're just below. But this we could see a bit of a, to end the week, a bit of a rally up into the maybe mid 30s, even up to 10.42, 43 here, which would still only be a correction of the broader move. I still think that sooner or later, maybe in this case it will be later, that we will see a resumption of the downtrend, but let's see. Yeah, otherwise, if we can't hold this break, it will look a bit fakey, and we will continue this channel. But just one worth noting, it could be pushing a little bit further on this Friday, depending what the market wants to do with the dollar. And with that, Ryan, looking at the clock, back over to you.
Thank you very much, mate. We're not going to clock off just yet because I was a little bit naughty before the flow started. I put on our Twitter that the whole show was going to be about crypto, so I might have dragged a few crypto pods in, but I'm not going to leave you guys hanging. I'm going to have a look at this, and I want to know what's going on, crypto bros. Any of you in the room, because this is looking dodgy. Now, I'm no expert on the comings and goings on crypto.
We all are. Come on.
I've been in this market long enough to know when things smell a bit stinky. When you get someone who's apparently been in crypto since 2011, holding tons of it, and suddenly decides to bail out, that suggests there's something going on. I don't know what's going on. We had that stuff with Saylor the other day, that he was getting out of a chunk as well, although that might have been just some wallet shifting. So this is a big capitulation at the moment. Okay, these aren't small moves, as you well know. So is something cooking in the crypto market? Do people know? And if they're going to know, it's going to be the whales that know. As I say, you don't just give up on 1.3 billion's worth of position unless you're worried about something. So what is going on here? In the meantime, price-wise, technicals, and I don't really trust technicals on coins and stuff, crypto, but it is what it is. They're always going to become a fashion after the first crap out. We're below the 38.2 with this rally since 2022. This is going to be a big level down here. Price action-wise, speaks for itself. Between March and November 2024, it was a resistance point. So if we get back down there, that's going to be very interesting. But yeah, I don't know what's going on in the market. Some of you might have a better idea. I'm going to give you a link.
I think it's all linked. I think it's all linked. The fact that Nvidia rose and then gave it all up. We heard about Burry. We heard about Thiel. We heard about Saylor. Exactly. We heard about this guy. But it's all linked. I mean, AI chips, crypto, whatever. It's all one big pot. I'm pretty sure that. Well, if they don't talk together, they will know what they do, and if the one moves, the other one moves as well. And as you rightfully said in the room, the ones left with the hot potato are the retailers who will hodl likely.
Yeah, exactly. And that's a lesson as well. If you're trading Bitcoin, if you're getting sucked into buy the fucking dip because helmets on Twitter tell you to do that, you've always got to pay attention to what the whale's doing. We do that with Japan and the big pension whales. We do that with big traders in markets. If they're doing something, there's a reason they're doing it. Okay, and you don't want to fight it. All right. Now I've just put a link in our Zoom chat to a Twitter account I follow. Cam, he's up on his crypto stuff, so he's a good follow. If you want to give him a few clicks, I'm sure he'd be appreciated of it. And yeah, I might even get him on to a show one day. If you're listening, Cam, I'll get you onto a show and you can have a little bit of a waffle on. But yeah, be very careful. If the whales are moving, you want to be listening because they're the biggest fish in the sea, or mammals in the sea. Right, on that note, that's it for the week. Thank you very much for following us here at the Flow Show. I'll do Bitcoin again in another 50 years. Apart from that, have a great day. Have a great weekend. We'll see you all on Monday.